Hello, everyone. I'm Will Hankey from Red Canoe Media. Thanks for joining me today on the Navigate the Rapids podcast and broadcast on video. Today we're talking about selling out, but maybe not in the way that you think about it, but more along the lines of preparing your business to sell somewhere down the line so that you can end up somewhere warm, such as Tahiti, for instance, would be a good place. Today is January 16th, 2015. And my guest today is Dave Driscoll, from the president and owner of Metro Business Advisors. Dave's experience and understanding of ownership makes him uniquely qualified to help business owners with the preparation and sale of their most valuable asset, the proceeds of which will fund their life beyond business. Dave has genuine enthusiasm and the experience to provide this valuable service to fellow business owners, creating a roadmap for them to realize their dreams. Dave, Happy New Year and welcome to the show.
Thanks, Will. Nice to be here.
So tell me a little bit about your past ownership prior to starting Metro Business Advisors.
Well, my past ownership is the whole reason why I did start Metro Business Advisors. I started my own manufacturing company when I was 24. Didn't know a thing about it. Kind of learned everything on the fly. I had a degree in finance going forward, but very much mechanically oriented, as well as I felt pretty good sales representative. So I started my own company after working with somebody for about 18 months. One thing led to another. Bought some equipment, got some accounts here and there, and after 30 years, the business grew to about $20 million in revenue and about 165 employees. And so during that period of time, I'd learned a tremendous amount about business, about planning, about looking ahead, about dealing with current situations, insurance, labor, products, how-to. We were in a manufacturing business that interfaced on a B2B level, so we were constantly dealing with clients, selling them product and quality-oriented that. So during that period of time, I just felt I learned so much, and I had the circumstances came up in about 2006 that the industry itself had changed so dramatically. I was in the envelope manufacturing industry, so okay. You know, here we are. We're sitting in a webcam environment. You know, it totally defines what happened to the envelope. I mean, technology has completely obliterated that industry. And I was such a small player at $20 million in revenue. I was competing with guys that are 10 times my size and even bigger than that. So the low-hanging fruit principles, I just felt I better just get out of the way. So I sold the business, and I was at an age in which it just, you know, at 56 years old, just felt that I had gained so much knowledge about building a business, working in that business, and then getting out of the business, selling a business.
Right.
Is that I've done something that few people do, and I thought the best thing I can do going forward is to share that knowledge with fellow owners, and that's what started Metro. Started out in exit planning, you know, preparing everyone for the sale of the transfer or sale of their business, going in and doing corporate hygiene and going inside and helping improve the value. Then move from exit planning combined to the operation into business valuation, so we can determine what the value of that asset is for that individual. It's their life's work. They've been working at it for 20, 30, 40 years, yet they probably never knew what it was worth, and 9 times out of 10 they think it's worth more than it actually is. So right. When it comes time to planning, when it's getting closer to that point where you really need to know what planning is, then you got to know what that value is.
Yeah.
And then went from there, developed more into selling of businesses. So as you can see, we have the whole process, from the planning side through the valuation side through the actual either transfer the business through succession planning, when you have an insider, either a key employee, family, or whatever, or selling to a third party, to an unrelated third party. So it's really a continuum that we have, that we take all this through. So I find it extremely rewarding. I started it in 2008. Here we are, 2015. 2008 was not the best year to start a business.
Right.
I will tell you that straight up. It was, but everybody was in a marketing mode. So you had a lot of opportunity to interact. So with people and with networking and all that other stuff. So it served me well. But so here I am today in this business, which I'm very fortunate to have a second career.
Yeah, that's pretty cool. 2008 to 2011 was some of my best times too, because, like you said, everybody was in marketing mode, and suddenly needed to be in front of customers.
That's right. That's right. Everybody was out reaching for everyone to have a conversation.
Yeah. So I've actually been in business for around 17 years now, but only the last 5 or 6 I've really started kind of pushing, going out there and really building a business around things. What are some things financially that I should have in place as, I guess, what you would consider to be a young company?
Businesses need revenue. That means that you have to have a marketing engine that is working to provide that revenue. And then once you have the opportunity to gain that revenue, you have to have process and procedures sitting behind it to support it. Because getting it is one thing, holding on to it is another. You have to be able to hold on to it once you have it. You can go out and be the best marketer of all times, but if you don't have a process sitting behind it that is flexible enough to handle that and make you satisfy that customer, then all you're doing is marketing. You're never cashing a check, or you're going to get something in and you're going to lose the client because your processes can't sit behind it. So that's one thing. The second thing would be cash flow. Watch your cash flow. Plan those expenditures. Always monitor what your cash flow is. Don't get into too much debt. Don't get yourself overly anxious out in front of you from the marketing side where you outstrip your capital structures, and all of a sudden now you're in a I gotta have this business kind of situation. I had a salesman one time when I was in Envelope, and normally it took about 18 months for an envelope salesman to really start getting their legs.
Sure.
And he was struggling, and he was getting really anxious. And he says, "Dave, what am I doing wrong?" I said, "You're selling angry. You need that sale so bad that it's written all over your face, and you're going up there like strangling somebody around the neck for the order. You don't want to get into that situation." So it's marketing. Have a process that sits behind the marketing. Watch your cash flow.
Terrific. I really like especially the process part of that. Something that we've really started doing a lot lately. I have my daughter that works with me, and so I'm teaching her a lot of new things that she really doesn't know a whole lot about. And so the first thing I always say is, okay, open up Word and let's type this out, so we have it for next time.
Right.
Yeah, I think that's hugely important because, along with that, next time it needs to be done, all she has to do is pull up that Word doc. I don't have to spend my time teaching her again. I can continue to run the business.
Right. Now there's a famous book out there, famous for young entrepreneurs and small businesses, called E-Myth. Revisited. And what you're doing right there is you're creating a repeatable business, repeatable processes, to the point where you're building that business away from you and putting it into a piece of paper that someone can reference and say, okay, here's this situation I'm in. Open the piece of the notebook or whatever, or open up the computer file, and this is what I do. They don't have to call Will and ask him.
Right.
So you do that as much as you can, because to build the value of your business, you have to build it away from yourself.
That's terrific.
Yeah.
That's real good. So, what is one of the most critically important financial event during a business owner's life?
When he sells it, when he sells his business. I mean,
Yeah.
all of that work, all that preparation, and in my case, it was almost 30 years of doing the same thing, building that value, just by your actions in building your business and your clientele and your network. But you really don't know what that value is, and secondarily, it is totally illiquid. I mean, it doesn't. It's not monetized. You don't know truly what the value is. The market will place a value on that, but you have to convert it from an illiquid asset to a liquid asset.
Yeah.
And the way to do that is through building value.
Okay. What percentage of people do you think you meet? So, say you go to a networking event. What percentage of the people at this networking event do you think are actually in the mindset of building something that they're going to sell at some point?
0.
Yeah.
Well, maybe, let me qualify that. Maybe those who are in their middle 50s. You know, everything goes in cycles. And so as you get older, you start thinking about other things. If you've been running your business for 20 years, you start thinking, is this all there is? Is there anything more to life? Those people are different, but the normal person is so busy working in their business every day, responding to all of the crises or the phone calls or the customers or the to-do list.
Yeah.
They very rarely have an opportunity to work on their business. Okay, why am I doing this? What am I building? What's its value? How do I maximize? What are the key elements of building value within a business from a buyer's perspective, not from yours?
Right.
You can't look at it and say, this is what I think. No, you got to look at it through the eyes of the buyer, because that's the person who's going to write you the check.
Yeah.
Yeah.
So yeah, that's terrific. I would totally agree with that. I think there's so many people out there trying to get those business cards out and things like that they're not, including myself. I mean, it's something that I've really just kind of started thinking about in the last 2 years, maybe. That at some point I want to go fishing. So.
Yeah.
So I saw on your website that around 75% of typical business owners' net worth is tied directly to their company.
Correct.
Tell me a little bit about that.
If you think about it, you start a business, you put your own capital into the business to start it. Then you start operating in a business, and hopefully that business gets to the point where you can gain income off of that business. And you just start developing it. Well, by the development of that business, you're building value. Okay? It might take additional capital from you along the way, or borrowings from a bank or something like that, to continue building that business. But when I say 75, when the statistics say 75% of their net worth, because that is their largest single asset, for them to be able to, let's say, build that net worth outside of their business, pretty tough to do unless you're in a business that has very low capital requirements and you can make a lot of money at.
Right.
So and they're out there, but they're very few and far between. So all of your building and all your capital is being dedicated to building your own business. Well, over time, that just kind of builds and amasses and all that stuff. And if you don't really keep track of what the value of that business is, pretty soon, I've seen people where 90% of their worth is in a business, which is totally illiquid.
Yeah.
So when it comes to time to sell that business, to fund their retirements or something like that, you really can end up in no man's land. You might not know what the business is worth. They might think it's worth $1 million. The market might say it's worth 500. Well, then all of a sudden that person has been thinking as an asset worth $1 million, and he's going to be able to retire and do all this other stuff, and it's not going to happen.
Yeah.
So, 70 that is a big issue. Business owners have to realize the value or the size of that asset as it relates to their total assets for their retirement.
So knowing the value of your business as an owner can help you make other decisions, from there on out.
Oh, absolutely, absolutely. Think about it. Let's say, for example, and I use this example in seminars all the time. You have a business that's worth $3 million, and you want to get into some initiative, whether it be online marketing, e-commerce, buy another machine, do whatever it would be, which is quite expensive.
Yeah.
And let's say that whole initiative could cost $1 million. Well, you ask yourself, are you willing to bet $1 million, well, basically, all that, a third of your worth against an offering going out there? It causes you pause, and it just makes you think a little deeper. It's it's all I know. I remember when I bought my first machine in the envelope manufacturing business. It cost $400,000, for God's sakes. It was 1988. I was sweating bullets. I mean, I was like, oh my gosh, But I thought it through, and I figured out this is what the company's worth. This is how much I'm wagering, if you will. And with a machine, it's always, you can always sell the machine, maybe take a little haircut on it and sell it. But with a marketing program, not so much. So you got to really be cautious about how you, what kind of risk you take going forward, and knowing the value of your business really helps.
Yeah, that's terrific. So you talked earlier about business cycles too. How and in particular how they can change over time. Tell me a little bit more about that.
I tell you, business cycles are very interesting phenomenon. I was in the as I say, the envelope manufacturing business, and there's always this roll up and down, and you really have to be careful as to read what kind of cycle we in. Are we in an up cycle? Are we in a down? Are we kind of moving along? Are we kind of drifting downward? Whatever. To me, that's always being able to keep your eye on the horizon. As a business owner, always kind of looking out ahead of yourself about a little bit over the horizon and say, what do I see out there? And make some judgments. And try to anticipate those business cycles. When it comes especially to the time you want to sell your business, you always want to position the sale. Well, I'll get back to when to sell the business, but you always want to position the time you want to sell your business, what I say, 2/3 the way up the upcycle. Okay. You always want to give the guy who buys it a chance to make money.
Yep. That makes sense.
Because if you feel you're at the top, the ride down is going to be quite bumpy for some new owner. He just gives you $1 million, and all of a sudden it craters, and it's like he might owe you money. You might be financing the project or something like that, and all of a sudden goes down. Well, you want to always give the new owner a chance to see how good it is to keep going with it. And what I hesitated on is never, ever, ever think as a business owner you are in control of the day you sell that business.
Interesting.
If you think, okay, I'm going to run this game, and I'm going to reach a certain age, and this, I'm going to be 58 years old, and I'm going to put a sign in the yard, and somebody's going to give me a big bag of money. Don't happen. It doesn't happen. It doesn't happen.
Oh, crap. Now I'm going to have to replan everything.
When you least expect it, someone's going to make you an offer that's going to turn your head. And that happened to me a couple of times. And I was so young and bulletproof and just like you, ready, charged up, ready to go. I missed some tremendous opportunities to sell the business because I was completely unprepared for someone coming to me and saying, we'd like to entertain having conversations with you about buying your business. Yeah. Oh, my ego was as big as the all outdoors, and and all of a sudden you start thinking of things, and your mind starts getting in the way, and it really clouds your vision. So don't ever think you can plan your exit unless you're succeeding, have a succession plan to a child or a key family, a key employee. But don't ever think if it comes to selling that business third party, you're going to control it. It just doesn't happen.
Yeah. So do you think that if somebody comes along when you least expect it and asks that kind of a question, should you be armed for some sort of an answer? In other words, should you have you know what your business is worth? Is that something that you would have to have a coach like yourself or something kind of in the back pocket, or is that, I mean, best case scenario, is that what it is?
Best case scenario is, you ever heard the phrase, the first one who speaks dies?
Sure.
Okay. You don't want to be the first one who speaks, but you want to know what the value of your business is.
Right.
You want to get that person's name on your dance card. You want to waltz around with them a little bit. You want to talk to them. You want to get them to know your business, whatever. You want to know what the value of your business is, and you want to engage. You want to engage and talk to them. Give them enough information to have him make you an offer, or him or her make you an offer. The first one who speaks dies, meaning that if you go out and say, I want $1 million, who knows, you might have gotten two.
Right, yeah.
Or if you go out and say $1 million, the guy might just walk because it's not worth more than 500.
Right, or he hasn't been educated and that relationship hasn't been built.
Exactly.
Yeah.
Exactly. Which is hard to do. It's hard to do when you're, when we're in the business of selling businesses, because everybody expects there to be an asking price. Okay, and that's a different scenario, because now you as the owner are going out and marketing your business for sale, just like selling a product.
Right.
Well, if someone's coming to you, you really want to be coy. You want to provide the information. You want to have the knowledge. You want to provide them information to have them make an educated decision. But then you want them to come to you and for you to say yay or nay, or negotiate.
Yeah. So what did you do when that happened the first time? You just like go away? Yeah.
Well, I was the guy who had a very high opinion of what his company was worth.
Right.
Didn't really know. I didn't do what I'm advocating to do now, which is know what the value of my business was, and I approached that totally emotionally.
Oh yeah.
And oh my gosh, I was probably 50% higher than the buyer thought the value was. It was still a lot of money,
right.
But so when I was the first one to speak,
yeah,
then the dance stopped. Because I was so off the mark that the suitor, the buyer, said there's too much emotion wrapped up in this. It's going to be too unrealistic. He just didn't want to go down that road. So always first one speaks dies, and always know what the value of your business is, and always entertain and inform their conversations, but don't be the first one to put a number in put the sign in the yard that says, for sale, $10 or whatever.
Right. Yeah.
Yeah.
So let's say nobody shows up and offers you all kinds of money, and you get into a exit planning type situation. Now I know that the SBA says around 40% of businesses at any one time are in some sort of transfer of ownership situation.
Right.
I also read that the primary cause for that failure is lack of planning.
Right.
So that is something that Metro helps with.
Absolutely, absolutely. That's part of our, the succession planning piece. There's people who start beginning this process, this timeline a little further, farther away from the day they want to exit. It takes planning and preparation. Let me give you an example. The biggest driver in planning is tax minimization.
Okay.
Because think about it. you have a partner in your business. You have a partner in your business. I have a partner in mine. It's called the U.S. government.
Yeah.
When you sell your business, the minimum they're going to get is 40%.
Oh, wow.
So that's a big shareholder.
Yeah.
In your business. So what do you want to do? You want to be able to employ tax strategies that will get you legally to minimize that bite. For example, if you are a C corporation and selling at a sole owner C corporation, your tax load on the sale could be up to 60 to 65%.
Oh, wow.
Because you not only have to pay corporate tax, then you have to pay earnings tax on, capital gains and earnings tax. So you take your 40% rate, you add a 20%, 25% capital gains rate to it, voila, there you are. You're at 65%. So those type of strategies need to be developed over time. Time is your ally.
Yeah.
If you want to try to do that within the year that you're going to sell the business, your options are limited, much more limited than they would be if you want to start planning your transition of your business 4, 5, 6, 7 years down prior to when it happens. You'll be able to take advantage of tax minimization strategies. That's a big deal. And the other thing is preparing your management. The single most valuable employee group within your company is your managers. I don't want to tell you, it's not you. You're the least important when it comes to selling that business. And there's where a lot of people's owners' emotions kind of get in the way. They think they're king, and everything revolves around them. If that's the case, their business is almost worth nothing.
Right.
Because when they walk out the door, so does the business.
Yeah. So then you're back to the whole thing we talked about earlier with the procedures and
absolutely
having that kind of stuff already in place.
Absolutely. Absolutely. Yeah. Yeah. No, it's very, very important to build the organization away from yourself.
Yeah.
So that if you can go out and take a month off or 3 months off, and that business doesn't miss a beat and it just keeps going, you're in the right place.
Yeah, that's real good. So, is there a difference between exit planning if your son is taking over the business versus some internal employees, and even versus Joe Average who just happens to want to buy your business?
Well, there's two different events going on there. Joe Average is a unrelated third-party buyer.
Okay.
So we treat those differently. When you have your son or a key employee buying the business, there's two things that is not unique, but is both of those entities have no money.
Okay, yeah.
They don't have the money.
Right.
They're not going to be able to write you a check, and you go off to your life beyond business. So there's going to be financing. There's going to be when does control move of the organization from an ownership standpoint. Okay. All of those things start getting into a little more complicated. Do they have to earn their position in? Do they have the skill and do they have the skills and the intellectual ability to handle it? Right. Part of our process in succession planning is to truly do assessment of individuals against peer groups to see whether they have the ability they have financial management abilities.
Okay.
Do they have people skills? Do they have all these things that are so important for someone running a business? We all start a business and we learn that stuff OJT. Sometimes we learn it, sometimes we don't.
Right.
It gets pretty hard. But no, you have to find out, because you're handing off your business to someone who's going to owe you money. Right. You're going to be carrying risk into the future. You have to minimize your risk with proper due diligence before you elect the anointed one to take your business forward, because they're going to have to use that business to pay you back. Yeah. So you got to be real careful in there.
Yeah.
Because they don't have any money.
Yeah.
No, they don't have any money. That's the way it is. But you know.
Yeah, those are good tips. You also help people buy businesses. So what kind of tips do you have for people that are maybe in a situation where they're looking to purchase a business?
First thing is developing a passion. You have to have a passion for the business. It cannot be just a financial play. You know, there's something that's going to have to get you out of bed in the morning to light the fire, to help you be creative and drive the business. Secondly, you have to make sure that the business itself can support your lifestyle.
Okay.
You know, is it in the cards? Can you make money at this business? Can you support your family? Can you pay the mortgage? Can you put gas in the tank? Can you make a living at it? So those to me are the two elements, the best elements to, you got to have the passion, and can you make money at it? And then the final thing would be, what type of industry are you in? Is it a service industry you're looking at, or is it a technologically driven industry, or is it a mature industry? Think about it. I wouldn't invest in an envelope company right now. Okay, when you look, so somebody might be jazzed about envelopes, as I was, and look at it and say, I make a little money out of it. But then the technology you're in is, look out. I mean, it's like you're drinking out of a fire hose, all the change that's coming at you. So, so those three elements, I think, are critically important.
And you guys can help somebody. So if somebody just wants to buy a business, you guys can help with that side of things as well.
Correct. Typically, we represent sellers, but every seller needs a buyer. Yeah. So, having the knowledge of what buyers are looking for helps us put buyers and sellers together. A lot of times we will put those folks together without even going out to the public markets.
Nice.
Nice. When you see someone who's this aptitude and that you introduce them, you talk together, and then all of a sudden there's a deal made.
Yeah, nice.
Yeah.
So how can people learn more about building their business value?
Well, talk to me. Go to our website, metrobusinessadvisors.com. Tremendous amount of information on there as far as tips to build your business, build value, how to start positioning your business. Myself, I'm very open. I'm one that I'm not transaction driven as much as process and accomplishment.
All right.
I'm not out there looking, I'm going to list your business and then we're going to sell it and I'm going to get my commissions and yada yada. No. If you're close to thinking about selling your business, then I want to start looking at it in the whole and say, okay, from a tax standpoint, this is going to be your walk away, your walk away from the closing. Is that going to be enough? Can you live on it? All of this type of stuff. What is your tax structure? Is there a way for us to build the value of this business? Let's say we do a business valuation and find out the business is worth $500,000, but you need it to be $1 million. Well, what can we do possibly to increase that value to $1 million?
Oh, nice.
Those type of things. So it's not all about transactions. It's all about the process. And what I truly believe in is they're helping a business owner achieve their life beyond business. That's what we're all doing this for. Someday to have our own freedoms.
Right, to go fishing.
Go fishing. That's right. That's right. Go fishing. Yeah.
Well, listen, Dave, I really appreciate you coming on the show today.
I've had fun.
Yeah, I know we had a little technical difficulties at the beginning, but
hey,
that's
it's my fault.
That's technology.
You guys, the young ones are better at the technology than I am. I'll get there, just a little slower.
Yeah, we're dragging you along, huh?
That's right. Just drag me along, Will.
Yeah. Listen, I really appreciate it. So people can go to your website, metrobusinessadvisors.com.
Correct.
They can also give you a call and ask questions, I assume.
Absolutely.
And there's also things out on your website that they can get tons more information about too. I know that you have a podcast out there that answers a ton of other questions about some things. Lots of great things out there. So I really appreciate you coming on the show today.
My pleasure. Well, I appreciate the invitation.
All right.
All right.
My guest today is Dave Driscoll from Metro Business Advisors. Hey, everyone. Thanks for joining us today, and hope that we've helped you navigate the rapids a little better.